Welcome back to our cryptocurrency coin TV. In this video, we are going to talk about 5 trends you must follow in cryptocurrency in 2021. So before starting this video, please like this video, and subscribe to our channel for the future updates. Predicting the crypto industry's trajectory is always exciting because it is growing both in tandem with and in opposition to the conventional financial system. On the one side, the implementation of crypto user identification criteria, the increasing interest in government digital currencies, PayPal's crypto service, and Facebook's upcoming launch of the stablecoin 𝗪𝘂𝗵, among other events, suggest that digital assets are finally becoming more understandable and common. The speed at which cryptocurrency is distributed, on the other hand, is directly proportional to how easily operations of different brands and flavors become available and accepted in each conventional bank or payment system. The widespread use of digital assets is both a goal and a source of concern for the world. The effort to strike a balance between benefit and danger when using cryptocurrencies in 2021 will decide the trends. With many big cryptocurrencies catching the tailwinds, Bitcoin is arguably the hottest asset out there. Few people can now honestly say the cryptocurrency isn't here to stay. The market for cryptocurrency has skyrocketed as a result of the rally. This pattern is reflected in investor activity in trading apps. In addition to its role as a speculative asset, cryptocurrency is undergoing fundamental changes and becoming more embedded in real-world commerce. Businesses are performing a variety of studies as the new year approaches in order to boost their fortunes in the coming year. Organizational changes, strategy changes, and even the introduction of new innovation are all examples of changes. Cryptocurrency is a natural match for this scenario. For many companies, an effective payment mechanism or a valuable asset network checks all the boxes. Here's a list of the trends you must follow in cryptocurrency in 2021. Let's start. Number 5. The first crypto crisis is coming. Not only is the crypto world becoming more open, supervised, and stable, but it is also starting to face a variety of economic challenges and tests. The harbingers of the first crisis, which has nothing to do with cybercrime or fraud, are already visible. Bitcoin, BTC, broke the $34,000 barrier in December, setting a new high. However, the cause was not only rising BTC demand, but also an oversupply in the market for stablecoins like Tether, USDT, which account for 70% of all crypto exchange trading. Tether, which is registered in the British Virgin Islands, is constantly increasing its coin emission in order to increase the capitalization of its coins. Market participants, on the other hand, have significant doubts that USDT stablecoins are really backed by fiat assets, such as US dollars. Tether is also owned by 𝗪𝘂𝗵𝗵, a corporation against which plaintiffs filed a $1.4 trillion class action lawsuit in 2017-2018 alleging market abuse. As a consequence, what we see on crypto exchanges today is similar to what occurs in the conventional economy when governments start printing money. A surplus of fiat money supply in the system causes dollar inflation and therefore devaluation. We see the depreciation of currency, which is currently USDT in the crypto world, which contributes to an increase in the cost of products, which is currently BTC in the crypto world. As a result, current trends could lead to further altcoin depreciation and an increase in the price of Bitcoin, whose supply is known to be limited. Number 4. Crypto will see tax regulation. The key subject for the foreseeable future is cryptocurrency taxation. Crypto taxation is still a nebulous concept today, a fantasy far removed from reality. Crypto taxes are not yet common, and although they may be unwelcome to some, they have started to emerge in some countries as such markets mature and governments see the potential for increased revenue outweigh previous crypto uncertainties. However, the implementation of Know Your Customer (KYC) procedures, the creation of protocols that allow for transaction monitoring, and the adoption of regulations on digital assets all suggest that things are changing, and changing faster than some would anticipate. We're also seeing surveillance tools being actively developed, as well as governments sharing information on cryptocurrency owners and transactions. As a result, the first Bitcoin tax avoidance cases are expected to be filed in 2021. Number 3. Risk assessment models will improve. With the increase in Bitcoin's value, there is an urgent need for the creation of a high-quality risk assessment model, as it is becoming increasingly difficult for users to critically evaluate the potential outcome of crypto investments without succumbing to the general rush. Services that have a practical approach rather than digital fortune-telling on the coffee grounds would be able to rapidly win the hearts, minds, and wallets of both new and seasoned cryptocurrency investors. There are over 8,000 separate cryptocurrencies in the world today, according to CoinMarketCap. More than 90% of them are deceptive schemes, or scams, as they're known in the industry. However, many of the remaining 10% have growth rates that are comparable to, if not better than, Bitcoin. Those who want to invest in crypto, on the other hand, must accept a number of risks that can cause a coin's value to rise or fall. Organizational. For example, which country the issuing company and the crypto exchange are based in, and what legislative changes are occurring in that country in favor of, or against, digital assets. Technical. Coding bugs, information security flaws, and computer security flaws, all of which can be exploited by cyber criminals to steal cryptocurrency. Price risks. This is still the most difficult form of risk to determine. Analysts may monitor the movement of large quantities of cryptocurrencies, decide who owns them, and observe behavior relevant to their selling thanks to the ubiquitous KYC, user identification, and KYT, transaction identification, laws. It is possible to make assumptions regarding changes in the value of the cryptocurrency based on the data collected, depending on the targets, time, and other characteristics of such sales. The market size has grown, making it less reliant on individual speculation. There is less confusion in the crypto environment today, and there are more possibilities for developing analytical tools. However, understanding the complexities of alternative finance remains a challenge for new investors. Services that have a practical approach rather than digital fortune-telling on tea leaves and coffee grounds would be able to rapidly win the hearts, minds, and wallets of both newcomers and seasoned cryptocurrency investors. Number 2. The cost of transactions will change. This pattern is intriguing because it will have many directions. Because of technological advancements, Ether transactions will become cheaper, while Bitcoin transactions will continue to grow in price. Changes in the cost of operations can have an effect on e-commerce players' interest in cryptocurrencies. The fact that crypto is much easier to deal with than fiat currencies attracts online stores today. The speed with which cryptocurrency spreads as a payment method will be largely determined by whether it is possible to maintain this advantage in the long run. Number 1. 5G will reinvent a lot and be transformative. Many people are also underestimating the 5G norm, which is a new concept of data transmission. Its implementation will result in the emergence of new ideas and types of services, as well as changes in how mining is designed, what DeFi applications are being developed, and other factors. Transaction management features would no longer be constrained by network data rates with 5G. For example, when investment decisions are made by computers, 5G will dramatically alter the high-frequency trading section, particularly with the ultra-low latency that 5G provides. Traders are currently attempting to locate their server as close to the crypto exchange as possible, as the length of the wire influences the speed at which they can position or remove an order. 5G will assist in breaking down this barrier. Regardless of where the crypto exchange is located, both networks will have a level playing field for transactions. What is happening in front of our eyes is something that skeptics thought was unlikely until recently. The world of finance has become multipolar. Regulators, conventional financial firms, and crypto companies are rapidly working to maximize the benefits of crypto technology. Although not all major problems have been addressed as of today, I am confident that we will find solutions to many of them by 2021. As crypto continues to mature and gain global recognition, a positive outcome is unavoidable. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.